the end real quick. Let's get it out of the way. This is the Thursday morning trade recap. We need to go through our standard disclaimer first. All communications from Viper Trading Systems are for educational purposes only. Futures and Forex trading does involve risk. There is a risk of loss. Nothing contained in this video, as well as other training sessions, are to be construed as investment or trading advice. And of course, everyone in here does know that you do trade at your own sole discretion. All right, good. Now, if that's out of the way, let's get over to some charts. I'm going to start off today with EMD. For those of you that may be new with us or on an open house or a free trial, this is the MidCap 400 futures. It's $10 a tick. We're going to show you a couple of things here real quick. This is intended just to be a quick recap. This is by no means any kind of training session or anything like that. But I do want to show a couple of nice little trades that set up this morning on EMD early. Just to orient you on the time frame, I'm here in California, so this is all Pacific time. And 6:30, which is the open of the market, is 9:30 Eastern, is right about there. Okay. So you can see here that pre-market, and I'm sure Gary probably did this in the room with all of you before the market opens, but you can see here that there was a couple of swing areas that we wanted to kind of keep an eye on. Namely, I'm just going to show a couple of them real quick. You got one kind of there, and you got one kind of there, and another one over here. And when we say swing areas, these are areas where a market goes to, and this is kind of a general principle, hits its head or bounces and then kind of goes the other direction. So here we see some swing levels here. We can see that overnight the market had pretty much been heading, all the equities had been heading down, and when you looked at the Dow futures, they were down, I think, 63 points or something like that. So here's our 12 range guidance dots, which were kind of telling us to maybe start looking for some short trades. Now, right near the open, so essentially the market was pretty much kind of in this area right here. We had support down here at this pivot, 1990. You probably remember that number, right? And we had some resistance up here near 925, where the stop dots are. All right. Now, I'm not going to get into all sorts of probe trades. You did have a retracement. Technically, this was a probe. It did break support, but I'm going to show a really simple entry technique that we like to do that's pretty straightforward. Can you see this? You see this support level right in here? You see that support level right in there? These were critical swing levels that were kind of telling you pre-market where support was sitting. And notice how right after the market opened, about 5-10 minutes into the session, that the market came down, EMD, and just kind of sat on that pivot right here. See all these candles? Now, as I recall, and you can correct me, I think that the Russell, one of the other equities, was the first to break. So obviously what you could have done, I'm going to show you this here. And I think I've shifted into Sim. Let's make sure I'm in Sim. Yeah. Okay, good. All right. So you would have put your sell order underneath the pivot here to enter on a break. Having seen that the other equities were already breaking, we were more or less anticipating a break here. Now, if you recall, if you missed that break, okay, if you didn't have the order in, for some reason you didn't catch the short there, notice what happens here. And this is Nasdaq was a leader. You're right, Lee. That's right. I'm trying to go by memory here. My apologies. I think Nasdaq actually led the break. And we'll look at that in a second. I'll get a Nasdaq chart up here. I want to show you something. Look at what happened here. And we actually called this in real time, if you go back and remember, okay? Notice what happens here. See how you get a thrust down through support. Now, this doesn't always happen as clean as this did today. Here we come down through support. We don't quite get to the 2/8 pivot here at 918. We came very close to it. And then we get this really nice bounce right back up to the pivot. And remember I said if it hits 919 anywhere in here and rolls over, this is another chance to get short. Remember that? Everybody remember us saying that? Remember me saying that? And sure enough, it respected this pivot. It did not breach the support level that now has become resistance, and it rolled over perfectly. Remember I said put your initial stop at 2030? Here's why, because our stop dots were sitting right there. So you had very little risk. I mean, you're talking about like 4 or 5 ticks of risk, and your target was down here. Your initial target was down at this pivot at 918. So your risk return was very favorable on this trade. Some of you take that. I know some of you actually took that trade. But anyway, anyway, if you did enter that, you can see here it very nicely hit this pivot and took it out. Now, one of the things that we teach, and it comes up all the time, is, you know, they say, well, how do I know if I have a runner, or how do I know if I should be scalping? Diane, that's a good question. She is asking specifically around this particular entry. You could have put a sell order up in here, a sell limit, close to the pivot, and when it bipped up on this candle, it would have filled it, and your buy to cover stop would have been right here above this stop dots. So you had very little risk in the trade. If it happened very quickly, which it did, you could of course do a market order, sell market right as it came up here and roll. Boom, you're in. That's another way to get in. Or just a very simple candle pattern that most of you probably know here is, see how it came up to the pivot? You have candle 1, you have candle 2, which is inside of this circle, and you have candle 3, which rolls and breaks the support of this candle. This would be another entry for you right in here. See it? What I'm saying specifically is if you were concerned about putting a sell order up in here because of the risk and maybe it was going to go further higher, because these probes are sometimes hard to nail like that, you could have simply put your sell order under that candle right there, and as it rolled over and broke, it would have entered you short. So there's 2 or 3 different ways you could have gotten in there. Everybody see that entry? Pretty straightforward type of entry right here. All right, so here's your initial stop up here by the stop dots, and then of course you see the market dropped and it dropped and it dropped. Now, a word about runners versus scalping early in the morning on the equities. If this market had come down to this pivot and you saw some oscillation of candles where it kind of sat on it a little bit, like it did right here, right? See how the candles are just kind of sitting on it, sitting on it, sitting on it, and then it breaks? In this case here, you can see that these candles just plowed right through the pivot. Boom. So at the time when you were trading this, you were simply trailing your stop on the stop dots, right? You're trailing your stop, and at the time it hit it, your stop was sitting somewhere in here. And so you didn't really have much time to think about taking profit here because it's simple. Ooh, I got filled. Yeah, you see the difference here? You see the difference between a market just sitting at or near a pivot, and quite possibly it could bounce and take you out. If this had bounced and you were short, it would have taken the stop dots out, versus plowing right through it as if it wasn't even there. I mean, this moves so fast, I mean, essentially you just had to basically just trail your stop down. Oop, that's wrong. All right, let's say you're short from there. You got to buy to cover stop. And you're trailing it on down, trailing it on down. Now, there was a question about pivot extensions. You can see down here, for instance, that once you get below the extreme oversold 2/8 pivot, this is very simple. Can you see how you have about 20 ticks, 19, 20 ticks between these two pivots? Here's 18, here's 1990. Can you see that's about 19 to 20 ticks? Now, you run out of pivots here at the 2/8 because that's the bottom of the extreme oversold there. So what you do is you simply take a line, a horizontal line. You go 918 minus 19 or 20, put you down around 916.10. Does that number sound familiar? Remember we called that out, remember? So if you're short for higher levels, do a pivot extension, it would be down around 16.10. That should ring a bell for most of you because we did point that out. And this is a case here where you could have just simply banked. Oh, it's filling my orders. Let me close that out. That's confusing. Filling those orders. All right, so let's go back and recap. So you were short from up here on the break or the roll, the break or the roll, and you were trailing your buy to cover stop. And I'm not going to get into a lot of details on how to do this. This is what we teach in the webinars. But you're trailing your stop. You're trailing your stop, and possibly there's a number of areas you could have gotten out of. For instance, when it came through the pivot extension at 16.10, when it came back up through it, you could have had a very tight stop and been popped out there, or quite possibly when it came through the trailing stop dots, buy to cover, right somewhere in here. Both very acceptable exits for the trade. Now, when we talk about one and done, by the way, we had got a lot of good compliments on the webinar last night. We're going to send the recording to everybody, including those of you in an open house and a free trial, where we discuss more the psychology, not so much the mechanics of trading itself, but we dealt with a lot of issues like fear, patience, discipline, all the a lot of the psychological aspects of trading that a lot of traders struggle with and really work on. Yeah, Bruce, that is true. Bruce pointing out that this was a line in the sand short up here. Line in the sand is simply when a market comes up to the trailing, to the guidance dots and rolls over. So absolutely, Bruce, this was a very good short entry up in here right before the open of the market. And you know, I want to point out that if you were aggressive, you could have had a sell order underneath of this pivot as well, right in here. All acceptable entries, no question about it. But if you were a little more hesitant and patient, you could have taken the break here, or quite possibly the rollover here. Yeah. So when we say one and done, what we're referring to is that you take a trade, you know, wherever you got filled, and you get stopped out down here, and you know, just use round numbers, say 20 down to 1650-ish is how much? 30, about 34, 35 ticks. And since EMD is $10 a tick, this short trade, this one short trade here, would be worth somewhere around $350 approximately, depending on where you got in and out. You might have made a little bit less, a little bit more. If you got out the pivot, it was a little bit more. You know, if you got filled a little bit lower, it was a little bit less. I'm just saying in round numbers, you had about a 40 tick drop, and you probably got about 35 ticks of it. Everybody see that short? Anybody take this on EMD or the other markets? I'm going to show Nasdaq in a second here. Now, when we say the term one and done, what we're referring to is that, you know, if you've taken a trade, you've made a couple of $300, you don't necessarily want to continue to chase a market around, because look at what EMD did after this drop. I'm going to take this off of here because I think it's confusing. Everybody sees that trade, right? All right. Now, you know, you could make the case that in this consolidation you had a couple of what we call yellow bar probes, where the market comes up and tries to check some resistance level and then rolls over. And if you're a scalper, and some of you are, you know, you're in here shorting the market when it bounces and covering. That's a skill you can work on. It's a good skill to have if you can develop scalping skills, because sometimes it can pay off in range-bound markets where the trend is still definitely down and you're simply looking to take shorts. Guidance is still short and you're looking to take shorts. And then you see over here, we break support by just a few ticks, taking out the lows over here, and then we bounce up here. Let's show the bounce. Now, I'm not going to get into a lot of detail about what the market's doing right now. I simply wanted to show these trades early in the morning. I'm not going to analyze what's happening now. We're beyond when we want to close the room anyway. If there's no questions on EMD, I do want to show Nasdaq real quick. It's very similar in its movement, but the advantage of trading Nasdaq over EMD or a $10 instrument is that it's half the risk, $5 a tick. So when we say half the risk, what we're referring to is the level of stops. So for instance here on EMD, going back to this trade, if your initial stop is say 5 to 10 ticks on EMD from your entry, then at $10 a tick your risk is $50 to $100, yes? Initial risk on the trade. Whereas for that same trade on Nasdaq, 5 or 10 ticks would be $25 to $50. So it's half the risk. When we say half the risk, that's what we're referring to. So very quickly, the trades on NASI were a very similar condition here. Of course, the market had been selling off. Your guidance is short. You're consolidating here. Here's 6:30 Pacific. Open of the market is right over here. Let's make sure I'm in sim. Switched over. Yep. Okay, good. The open of the cash equity markets was here. Now, as you can see here, that NASI was a little weaker in the fact that, technically speaking, she broke her support level almost right after the open, right in here. Now, you can see that this was a pretty clean and well-defined support area from earlier in the morning, right in here, and you had been consolidating in this area for the better part of, you know, two or 3 hours, right in here. See the consolidation area? Everybody remember this? Now, if you took a short, let's say that you had a sell order right here, which I took. I actually took this short right here. I had a sell order right here. It got filled. Put all the contracts short right here. All right? So when it takes this support out, and by the way, I'm not going to get into a lot of detail about how to enter these trades. We cover all that in our webinars. But what you want to do here is when you see a fairly well, cleanly defined support area, as you had here, just a little tip, you really don't want to put your sell right on it, because quite possibly the wick of a candle can nick you in sometimes, and sometimes go back up into what we call the soup or the range, and then now you're upside down and hurting with your first trade. Generally speaking, you want to go at least 2 or 3 or more ticks below the support level to get filled on the short. Because here's the thing, if this thing is going to break, you want it to break with some conviction, yes? You don't want it to kind of dabble around down here and nicking you in and chopping you back around. You don't want that. You want it to take support out and get you short. Now notice what happens over here. You get filled on this candle, and you felt some heat. Okay, you felt some heat. If you were filled right here on one of these candles short, you felt some heat as it came back to this pivot. But notice what happened here. Can you see this pivot support level right in here? And the stop dots where it respected this. Can you see this? Can you see how it bounced up and held that level? Now this is where a lot of traders get nervous, right? You're feeling some heat. This trade was down, I think, 12 or 13 ticks at one point, as I recall. Okay, you're feeling heat, but your stop, your protected buy to cover stop was up here. So it never took you out. All right? Here's the thing with these trades. You've got to give some wiggle room to your trades. You just simply have to give wiggle room to your trades. A lot of traders, what they'll do is they'll get into a trade like this, they'll get nervous, and they'll have a 5-tick stop, and it's sitting there. And boom, sure enough, it takes you out on there. Well, sure, you lost 4 or 5 ticks, but look what happens now. Market rolls over and falls off the map. Boom, down she goes, down she goes, down she goes. She doesn't stop out until all the way down here. That's the stop out right there. So essentially, there's your trade. You're short from the break, and you buy to cover when it breaks the stop dots. That's your trade right there. 20, 40, 41-ish down to 28. 13 times 4 is 50 times $5 a tick is about I'm going to say 250 to 270 on the short. There's another one and done for you right there. This happens with some regularity, by the way. I can't give you exact numbers, but that's why we like to trade the equities early in the morning, because you get this kind of movement and you get the opportunity to get one and done trades. You pop in, you put your buy and sell, you put your stop, you trail your stop, trail your stop, trail your stop, and then boom, it takes you out down here. I know some of you have seen some types in here that some of the issues that we just discussed are issues that you're still dealing with in terms of having a tight stop. I mean, just to give you perspective on this, your buy to cover was up here on the entry on that trade, and this is where trading Nasdaq or YM at $5 can help you, okay? Because if you got filled at 40 3/4. And your stop was up here at 40, I don't know, 45 or 46, just a few ticks above the stop dots. It never took you out. And I can't remember. I think you felt, like I said, 12 or 13. So on one contract, you were only down $60. What I'm trying to say here is that if you want to feel a little heat and it's okay, I think most of us would be okay with a drawdown of $50 or $60. You wouldn't be panicking on these bars, would you? Most of you, I don't think you would. I hope most of us can withstand a 50 or 60 tick pullback like this, weather the storm, and then let the market go ahead and play itself out on the short. Okay, well, that's it. We did record this. We'll send this out to everybody shortly. We recorded last night's webinar. Everybody's going to get that. Now, we're only going to be able to download that through Sunday. So if you get the link, make sure you, get in and download that webinar recording from last night. It was a pretty good one. Talked a lot about psychology issues, fear and greed, entry levels, directional bias. Cover a lot of good topics. And one last thing, you're trying to get 1 or 2 good winners a day. We use the sniper analogy, right? Think of it this way. You got 1 or 2 bullets in your gun, right? 1 or 2 bullets, that's all you got. And you're going to be very careful and patient about your entries. And if you do that and you pick 1 or 2 winners, you simply bank the coin and go into sim. That's what we try to teach. Okay, Laura, Frank. I don't know what the P&L was. I don't know. I don't know. Gary wants to. Yeah, the Russell Lee. By the way, we also talked about this pretty in depth in that webinar last night. What you want to do on the equities is try to find an instrument that speaks to your personality. Okay, so yeah, I think he was 7,200 and change. I'm not sure exactly. I think he showed that earlier, 7,225, something like that on the P&L for Gary. Yeah, so what you want to do, don't focus so much on the money at these early stages of trading. This is really, finding good entries and managing your trades correctly is not about trying to make a ton of dough right now. That's not the point. What you're trying to develop is the skill sets to see and take the trades, which is transferable to any instrument, right? Once you can clearly see and take the entries and correctly manage your trade, then it's actually filled. The market must be over here somewhere. Oh yeah, there you go. All right, don't focus too much on the money. Just work on good trade entry and trade management, and trust me, the rest will come. Okay? All right, I'm going to close all this out, flatten that out, and that's your recap. I'm going to go ahead and stop the recording.